2023 has started off with a big bang for the crypto industry. There has been a 40% rally since the FTX scandals collapse that impacted the entire crypto industry. And to be honest, we were all so nervous. I did at one point think, is it over for crypto? I mean, a major exchange going bankrupt, this whole fiasco. Well, it looks like crypto has survived this. Bitcoin has hit $23,600 after so long. We were thinking Bitcoin was going to go down to 10K. But you know what's been clear? I did say on this channel that there has been a substantial amount of institutional investment as well as retail investment in Bitcoin. So it's given Bitcoin a bit of a floor price because there are so many hodlers that are simply holding Bitcoin. So almost take a look at that like liquidity is locked. Well, it's not really locked, but if people are holding on to Bitcoin, then it's clear that the bottom we saw for Bitcoin was the lowest point we saw after the FTX scandal. But that was also because of a lot of fear. But since then, we have rallied. Now, there's been a few reasons as to why these rallies have been taking place. Of course, number one, there have been huge fundamental developments in the crypto industry. But the main one is the global macroeconomic sentiment. Inflation had been sky high. And now the Federal Reserve have announced that inflation may be waning, which is good news. And lots of crypto stocks have also rallied. In fact, Coinbase soared. And I attended the Coinbase event, which was actually fantastic timing because just as the Coinbase stock was soaring, I was having pizza at the Coinbase offices in London. It was incredible. But one thing was surprising. Institutional interest in Bitcoin has fallen, as you can see on this chart. So the interest in Bitcoin futures faded towards the end of the last month, which is surprising given that we have seen rallies in Bitcoin's price. The floor price hit around $16,000, and I think that is our lowest level. I don't think Bitcoin's price will go down any less than that, even in a bear market, just because there are so many advocates of crypto now. There is so much adoption of blockchain technology, and the entire crypto ecosystem has grown from being just tokens to now providing DeFi services, GameFi, all sorts of use cases. But in this article, the writer has outlined that we suspect the crypto rally in the second half of January was more driven by retail than institutional investors. So this is crucial because a lot of people thought that institutional investment will keep crypto afloat. But I want to remind you guys that banks and institutions getting involved in crypto is more because they want to issue their own coins. I attended the Coinbase event and I met lots of different banks and people that work in the blockchain departments of these banks. And what they are saying is that these banks want to have their own in-house crypto, their own in-house digital currency. But for me, I really have to say that that isn't why crypto even became a thing. The whole point of crypto was decentralization. So that's where they wanted to avoid where governments would get involved and artificially change the value of money through monetary policy mechanisms like quantitative easing. Crypto came about as a way to rebel from centralization. Now, I'm all for different banks launching their own digital currencies, but I'm always going to be an advocate of truly decentralized cryptocurrencies because that is the ethos behind it. It's allowing the masses to be able to have governance and control and voting rights to an ecosystem that they can use as transaction methods, that they can use cases from, such as GameFi. They can play games and earn tokens from it. So that is one key takeaway I have to say. I do think the crypto industry has to evolve. I know there's been a lot of fantastic regulations coming about in different countries, but let's see how these actually impact the retail investors. Because I wouldn't want crypto to end up benefiting the large organizations that have been around for the longest time. I always saw crypto as that opportunity for retail investors, normal people like you and I, to get involved and also earn our share of the Web3 revolution. Anyway, guys, I want to keep this video short. I just wanted to give you guys an update and my thoughts on what's been happening. I will make some more update videos, so I'm not done. I have so many points I want to talk to you guys about. Also, guys, I have an interview coming up next week with Rock Zacharias. He is the co-founder of QuickSwap and he's also a core contributor at Dogechain. So if you haven't seen my previous interview with him, watch it. He's incredibly smart and he gives you a real idea about the crypto market and the dynamics behind the scenes in the crypto industry. So stay tuned for that and hit that bell notification so that you get informed on when this video comes out. So guys, don't forget that this is not financial advice. This content is for entertainment purposes. I simply am sharing my opinions on what my take is on the crypto markets. So just remember, you have to do your own research before you invest in anything. Cryptocurrencies are very volatile assets and your capital is at risk. So guys, I'll see you in the next video. Bye.